Ladies and gentlemen, I have to warn you, if you are holding silver right now, you are standing on the edge of a storm that most people refuse to even see coming. We're not talking about months or years here. We're talking days to prepare for a collapse that will shake the very foundations of the financial system you've been told is safe. We are living in a period of unprecedented financial recklessness, and most people have no idea how close we are to a complete economic meltdown. The signs are everywhere if you choose to look, yet the majority of individuals are lulled into a false sense of security by headlines and reassurances from politicians and central bankers. They tell us the economy is strong, that inflation is under control, and that the stock market reflects the health of the nation. But those are illusions. They are mirror edges designed to convince the public that everything is fine, while in reality the system is teetering on the edge of disaster. The truth is that the economic shock that is about to hit is not just coming. It is imminent, and those who are unprepared will suffer the consequences. The first thing you need to understand is that the foundations of this economy are rotten. Governments have been borrowing and spending at levels that are entirely unsustainable. The debt has ballooned to such heights that interest payments alone threaten to consume an ever-growing portion of national budgets. Every time central banks print money to cover deficits, they weaken the value of the currency. Yet most people fail to understand that this isn't some abstract concept. It has a very real impact on their savings, their purchasing power, and their ability to survive in a crisis. When the next shock hits, the purchasing power of the dollar, the euro, and virtually every major fiat currency will be devastated. Those who rely solely on cash or conventional bank accounts are going to be caught in the crossfire, scrambling to protect what little value they have left. This shock is not hypothetical. Look at the trajectory of inflation over the past decade. Even when the official numbers are manipulated to appear low, the cost of living has skyrocketed. Food, energy, and housing costs have all outpaced wage growth, leaving the average family increasingly vulnerable. And while some think this is just part of a cyclical pattern, it is anything but. The reality is that we are experiencing a structural collapse of purchasing power fueled by decades of reckless monetary policy. The moment the system realizes it cannot continue to prop up asset prices artificially, the economy will respond violently, the markets will crash, and the consequences will ripple through every corner of society. Even the stock market, which so many people rely on as a measure of financial health, is a ticking time bomb. Stock prices are not reflecting earnings, productivity, or real economic growth. They are reflecting artificially low interest rates and unlimited liquidity injected by central banks. This is not sustainable. Eventually, the bubble bursts, and when it does, it will not be a gentle correction. It will be a collapse that shakes confidence, destroys wealth, and leaves millions scrambling to understand what just happened. Those who have all their money tied up in equities or retirement accounts will wake up one morning to find that a decade of savings has been vaporized, almost overnight. Another factor that makes this shock imminent is the fragility of the banking system itself. Banks are not holding enough real assets to back up their liabilities. Their exposure to bad loans, derivatives, and risky financial instruments is enormous. One unexpected default or market move could set off a chain reaction that collapses the entire system. The global economy is interconnected in ways that magnify risk. A problem in one country, one sector, even one bank can trigger a worldwide panic. The last thing anyone should assume is that just because their bank has been too big to fail, they are safe. No bank is too big when the system itself is unstable. Complacency is the greatest danger. People are waiting for signs, for official warnings, or for politicians to act. But the truth is that governments and central banks will not provide real warnings because they are part of the problem. Their goal is to maintain the illusion of stability for as long as possible, even as the foundations crumble beneath us. By the time the average person recognizes the severity of the crisis, it will be too late. Markets will have reacted violently, prices will have spiked, and opportunities to protect wealth will have vanished. Only those who anticipate the shock and take decisive action now will have any chance of safeguarding themselves. The reality is simple. The economy cannot sustain its current trajectory. Debt, inflation, and currency debasement are all reaching levels that history shows are unsustainable. The next shock will not be gradual. It will hit fast and hard. Food prices will spike. Energy costs will soar. Banks will fail. Investment portfolios will collapse. People who believed they were secure will find themselves exposed. And those who prepared will have the rare advantage of survival. Those who understand the signs, who act preemptively, and who allocate their wealth into assets that retain value under stress will be the ones who come through relatively unscathed. This is not about fear-mongering. It's about reality. History has repeatedly shown that financial systems built on excessive debt, reckless money printing, inflated asset prices do not last. The warning signs are all around us. Rising inflation, volatile markets, unsustainable fiscal policy, and a global economy addicted to stimulus. The shock is coming, and it is coming now. Those who wait, who ignore the warning signs, or who continue to trust in a system that is fundamentally broken are going to be blindsided. Time is short. Every day that passes without preparation brings greater risk. Those who recognize the inevitability of this economic shock, who understand that it is not a distant threat but an imminent reality, will have the opportunity to protect themselves. The rest will wake up in a world where financial security is gone, replaced by chaos, scarcity, and uncertainty. The question is not whether the shock will happen. It is already happening. The question is whether you will be ready when it does. When the financial system collapses, most people will reach for cash, thinking their dollars, euros, or yen will protect them. That is the biggest mistake anyone can make. Fiat currencies are promises backed by nothing. They are fragile, manipulable, and entirely dependent on the faith of the public. When that faith falters, the currency collapses, and history is littered with examples of governments printing money until their citizens' wealth was wiped out. The only real insurance against that collapse is a tangible asset that has held value for thousands of years. That asset, historically and consistently, is silver. Silver is not a bet. It is not a speculative play that depends on someone else's confidence or the next quarterly earnings report. It is real wealth. It is money in its purest form. When governments debase their currencies through endless printing, silver preserves purchasing power. Unlike paper money, it cannot be devalued at will. Unlike stocks or bonds, it cannot default. Silver is what you turn to when the paper system fails, when inflation spirals out of control, and when trust in banks and governments evaporates. Those who understand this already know why holding silver is essential. They are the ones who will survive while everyone else scrambles to recover their destroyed savings. People often ask why they should hold silver instead of gold. Gold may get the headlines, but silver is more than just a companion metal. It is a strategic hedge because it is both a store of value and an industrial commodity. Its dual purpose makes it uniquely resistant to economic shock. When inflation spikes or currencies fall, the intrinsic value of silver provides a reliable hedge. But when demand for industrial applications surges, its price is pushed even higher. The combination of scarcity, utility, and historical reliability makes silver an asset unlike any other. It is the financial equivalent of owning something that both survives the storm and grows stronger as the world changes around it. Many investors overlook silver because it is cheap. They see the small price per ounce and assume it is insignificant. But that is exactly why it is so powerful as a hedge. You can accumulate a meaningful position in silver without bankrupting yourself. And the leverage it provides during a currency collapse is enormous. When fiat money fails, the value of silver skyrockets in relation to paper currency. Those who hold it will suddenly find themselves in a position of strength. While those who trusted their bank accounts, 41s, or government bonds will be left holding worthless promises. Silver is a lifeboat, and its value only becomes apparent when the ship is sinking. Another critical point is liquidity. In a crisis, you need something that can be universally recognized and exchanged. Paper money may become worthless and digital assets may fail when the infrastructure collapses. But silver is universally acknowledged as money. It is tangible, divisible, and transportable. You don't need a bank, a broker, or a government to validate its worth. In an emergency, silver is immediately usable. Its value is intrinsic and recognized worldwide, making it one of the few assets that will function even when the system itself fails. Silver is also one of the few hedges that provides both safety and opportunity. Its price tends to rise during periods of economic uncertainty, meaning it can protect your wealth while simultaneously allowing for growth. It does not depend on interest rates, corporate earnings, or government stimulus. It is not manipulated in the same way as stocks or bonds. Every time the dollar loses value, silver gains purchasing power. Every time governments print money, silver becomes more valuable in real terms. It is a hedge not only against inflation, but against the systemic failures that are inevitable given the trajectory of global debt deficits and central bank policies. Holding silver requires discipline. You cannot simply buy a few ounces and assume you are protected. You must hold it strategically, ensuring that it is in a form that is both safe and accessible. Physical silver in particular is critical. Paper claims or ETFs that are supposed to represent silver are only as reliable as the institution backing them. In a collapse, those promises can fail and your wealth can vanish in an instant. By holding tangible silver, you have full control over your hedge, ensuring it remains real, liquid, and ready for any scenario. The warning is clear. We are approaching a period where paper wealth will be tested to its limits. Stocks, bonds, and cash are all susceptible to collapse. The system is fragile and the reliance on faith in governments and central banks is misplaced. Silver is your insurance policy, your hedge, and your protection against the chaos that is coming. Those who fail to recognize this, who sit back and rely on the safety of paper assets, will be caught off guard and face devastating losses. Those who take action, who allocate a meaningful portion of their wealth into silver, will survive. They will have the ability to navigate the crisis with confidence, knowing that their wealth is secure even when the rest of the system fails. Silver is not just an investment, it is a necessity. It is a hedge against the inevitable collapse of currencies, a safeguard against financial instability, and a tool for preserving real wealth. Those who hold it are not speculators. They are pragmatists preparing for the economic reality that is fast approaching. When fiat money fails, when markets plunge, and when trust evaporates, silver will be one of the few assets that stand strong. It is tangible, reliable, and historically proven. In an uncertain world, it is one of the few things you can count on. If you have silver, hold it carefully, protect it, understand its value, and recognize its role in preserving your wealth. The time to act is now before the coming crisis makes it too late. Silver is your hedge, your lifeboat, and your protection against the collapse that is not just possible, but imminent. Those who understand and act will survive. Those who ignore the warning will be left behind. Time is the most critical factor in any economic crisis, and right now we do not have the luxury of waiting. The majority of people continue to live as if the world they know will continue indefinitely, trusting that governments and financial institutions will somehow prevent disaster. That trust is misplaced. The warning signs are all around us, and yet the average person treats them as distant threats or irrelevant noise. The reality is stark. The economic collapse that has been building for years is not a distant possibility. It is happening now, and the window to prepare is closing faster than most realize. Every day that passes without decisive action is another day that puts your wealth, security, and future at risk. Preparation is not optional. It is essential. Those who fail to act will not have the chance to recover once the crisis strikes. Cash, stocks, and bonds are no longer safe. Banks are vulnerable, and currencies are being devalued by central banks faster than ever before. The world is teetering on the edge of financial chaos, and the coming shock will test every assumption people have about security and stability. If you are holding paper assets or relying on digital money that exists only as entries on a balance sheet, you are already exposed. The time to act is not when the crisis hits. The time to act is now. While there is still an opportunity to protect yourself, immediate action begins with understanding the reality of the situation. The financial system is not just fragile, it is fundamentally broken. Debt levels are astronomical, government spending is out of control, and central banks have exhausted almost every tool in their arsenal. Interest rates, quantitative easing, and market interventions can only delay the inevitable. They cannot prevent it. History has repeatedly shown that when a financial system becomes this unstable, a crisis follows. The difference between those who survive and those who suffer catastrophic losses is preparation. Recognizing the risk is only the first step. Converting that recognition into concrete action is what will determine whether you emerge intact or destroyed. Diversification alone is no longer sufficient. Traditional advice about spreading your investments across stocks, bonds, and mutual funds assumes that the system itself is sound. When the system collapses, those assets move in unison, leaving people with nothing but paper that is rapidly losing value. Real preparation means moving beyond illusions of security and into assets that retain intrinsic value. Physical silver and gold, tangible resources, and other non-paper stores of wealth are not optional. They are essential. Holding these assets is not speculative. It is defensive. It is the financial equivalent of having a lifeboat ready before the ship begins to sink. But preparation is more than just accumulating assets. It is also about accessibility and liquidity. You must know where your assets are, how to access them, and how to use them if traditional systems fail. If all your silver is in a vault that is controlled by someone else, or if your resources are tied up in an account that may be frozen, you are not prepared. You need to ensure that your hedge is within reach, ready to be deployed when the crisis hits. Being prepared means having a plan for every scenario: market collapse, banking failure, supply shortages, or inflation spikes, and understanding exactly how your assets will function when they are needed most. Preparation also involves mindset. The majority of people are unprepared, not because they lack resources, but because they refuse to accept the reality of what is coming. Denial is one of the most dangerous states in a crisis. People convince themselves that the system is stable because they cannot imagine life without it. They cling to the idea that government guarantees, insurance, or interventions will save them. That mindset is fatal. Those who survive are those who accept the truth no matter how uncomfortable and take decisive steps to protect themselves. Waiting for reassurance or hoping for a miracle will only leave you exposed. Practical preparation extends beyond financial measures, includes understanding supply chains, having access to essentials, and anticipating disruptions. When markets panic, liquidity dries up and ordinary goods can become scarce. Those who plan ahead, who understand the vulnerabilities in food, energy, and medical supplies will find themselves at a tremendous advantage. This is not alarmism. It is reality. Every economic collapse in history has resulted in shortages, social unrest, and chaos. The more you prepare in advance, the more resilient you will be in the face of systemic failure. Time is the most unforgiving factor. Every moment you delay, the opportunity to secure assets, educate yourself, and establish contingency plans diminishes. The crisis will not wait for you to catch up. Inflation is rising, debt is increasing, and the value of paper wealth is eroding by the hour. The longer you postpone preparation, the greater the cost and the fewer options you will have when the shock arrives. Acting decisively now is the only way to ensure you are not caught off guard. Ultimately, preparation is about survival and opportunity. Those who understand what is coming and take action now will not only survive, but may find themselves in a position of strength when others are panicking. Assets that retain value will become scarce and highly sought after, providing both security and leverage in a collapsing economy. Conversely, those who fail to prepare will face devastating losses, forced to liquidate assets at rock-bottom prices, and left scrambling in a world that no longer operates according to the rules they trusted. The message is simple. The time to prepare is now. Delays will be costly. Complacency will be fatal. Wealth, security, and stability are not guaranteed. They are earned through foresight, action, and disciplined preparation. Those who understand this reality, who take responsibility for their own protection, and who act decisively will emerge from the coming crisis with their assets intact. While the unprepared will face a harsh and unforgiving reality, every day counts, every decision matters, and every ounce of preparation could make the difference between survival and devastation. We are not dealing with a simple market correction or a temporary slowdown. What is coming is a systemic collapse. A failure so deep that it will impact every level of the financial system, every currency, every institution, and every individual who relies on paper wealth. The economy is not a set of isolated components. It is a complex, interdependent web, and every thread in that web is under tremendous stress. Governments, central banks, and financial institutions have spent decades creating the illusion of stability. But the truth is the system has been walking on a tightrope over a chasm for years. The slightest misstep, the smallest disruption, and the entire structure could unravel almost instantly. Most people don't understand the magnitude of the problem because they are conditioned to trust the authorities who created it. Politicians assure us that debt doesn't matter. Central bankers insist that printing money is harmless. The media portrays market volatility as temporary or routine. But these reassurances are lies or at best dangerously naive. The entire global financial system is built on debt that can never be repaid, on currencies that are constantly debased, and on the assumption that confidence will never falter. When confidence does collapse, and there will be no mechanism strong enough to prevent a chain reaction of failures across banks, corporations, governments, and markets. The problem starts with debt. Sovereign debt, corporate debt, consumer debt, all of it has reached historic levels. Countries are borrowing not to invest, but to cover deficits and maintain appearances. Corporations are leveraging themselves to inflate stock prices, fund buybacks, and maintain unsustainable operations. Consumers are spending beyond their means, often backed by increasingly expensive credit. This is not a sustainable system. It is a bubble waiting to burst. When the first major domino falls, it will trigger defaults, bankruptcies, and cascading failures that will amplify far beyond the origin point. One country's debt crisis could quickly ripple across the globe, and the interconnectedness of the financial system ensures that no one is isolated from the fallout. Banks are another point of vulnerability. They operate on fractional reserves, meaning they only hold a fraction of their liabilities in real tangible assets. They are leveraged to the hilt, exposed to derivatives, bad loans, and complex financial instruments whose value depends entirely on the continuation of a fragile status quo. A single shock, whether it is a sudden interest rate spike, a wave of defaults, or a loss of confidence, can trigger a run on banks. When people realize that deposits are not fully backed, panic spreads like wildfire, and institutions that were once considered too big to fail can collapse overnight. And when banks fail, the impact is not limited to Wall Street. It reaches Main Street, every business, every household, and every retirement account. Currency is another critical factor in systemic collapse. Fiat money is essentially a promise with no intrinsic value. Governments have relied on the public's faith for centuries, but that faith can evaporate. The more money is printed, the weaker it becomes. Inflation erodes purchasing power, and hyperinflation destroys it entirely. When people lose confidence in their currency, they stop using it as money. Markets seize up, prices spike, and the economy grinds to a halt. Those who have relied entirely on cash or bank accounts will quickly discover that their wealth has been reduced to numbers on a screen, numbers that may no longer hold any real-world value. Systemic collapse is not only financial, it is societal. When markets crash, when banks fail, when money loses its purchasing power, the consequences are immediate and far-reaching. Supply chains break down, food, fuel, and medical supplies become scarce, jobs are lost, social unrest rises, governments may impose controls, restrictions, or emergency measures to maintain order. But these actions often exacerbate the situation, creating further panic and uncertainty. The individuals and families who are unprepared find themselves in a position of extreme vulnerability, entirely at the mercy of forces beyond their control. The warning signs are everywhere. Inflation is persistent and rising, debt levels are unsustainable, asset prices are inflated beyond economic reality, central banks are running out of tools to prop up markets, confidence in the financial system is already eroding, and yet most people do nothing believing that someone else, banks, governments, or policy interventions will prevent the collapse. That belief is dangerously false. There is no magical solution that can stabilize a fundamentally broken system. The collapse is inevitable. It is a matter of timing and scale. Those who recognize the warning and take action have a rare opportunity. Real assets, tangible wealth, and diversification into stores of value that exist outside the traditional financial system are the only reliable protection. Silver, gold, real estate, essential commodities, and practical preparations for scarcity provide both a hedge and a lifeline. The rest, cash, bonds, conventional retirement accounts, and reliance on government promises will be decimated when the system finally gives way. Understanding this distinction now before the collapse accelerates can mean the difference between survival and devastation. Systemic collapse does not unfold slowly. Once triggered, it moves with terrifying speed. Panic spreads, market spiral, and trust evaporates. Governments scramble to respond, but their options are limited. Central banks may print more money, but that only accelerates currency debasement. Bailouts may temporarily stabilize a few institutions, but they cannot address the underlying fragility of the system. Ordinary people are left to fend for themselves. Unprepared and exposed, those who have not recognized the warning, who have not acted to protect themselves, will face the harsh reality of a world where the rules they relied on no longer exist. The conclusion is simple. The system is fragile. It is unstable and it is on the brink of collapse. Ignoring the warning signs is not a strategy. It is a guarantee of being caught unprepared. The time to act is not when the crisis is visible in headlines or when panic is evident in the markets. The time to act is now while you still have control over your wealth, your resources, and your options. Those who do will survive the coming storm. Those who do not will face consequences that are severe, unavoidable, and entirely predictable. The choice is yours and the clock is ticking. History doesn't wait and neither does economic reality. If you hold silver, hold it wisely, protect it fiercely, and prepare for the days ahead, because when the storm hits, you'll either be ready or you'll wish you had listened. And believe me, there will be no second chances.